Hey, what's going on, YouTube? We're going to go through Etsy, ticker symbol Etsy, ETSY. So year to date on this company, we're down about, call it 26% over the course of 1 year, down about 29%. We're sitting at about 12.5% short interest. So they reported their Q1 earnings May 1st, missed on their revenue and missed on EPS as well. And then we have revisions from analysts here in the last 90 days after earnings, really. And 17 revisions lower, 2 revisions up higher. We come down here a little bit, we kind of get a little bit of an idea of what the analysts are expecting out of Etsy for the next coming quarters here. It looks like Q4, your seasonal quarter, very likely is to be, one of their higher quarters that they see. Sent into their earnings call, some of the key highlights from that is they have some guidance for us. Year-over-year decline in consolidated Q2 24 gross merchandise sales is expected to be similar to Q1 performance. The downside being a mid-single-digit decline, so not looking for any real significant growth in Q2, if anything, potentially even a bit of a decline. And then overall for Q2 outlook, their current view suggests a modest acceleration in year-over-year consolidated gross merchandise sales in the second half. So nothing guidance-wise is super exciting at all. If anything, just looking for a flat year. Even though analysts, as we can see down here, are expecting for a bit more than just a flat year. So 2 things they mentioned that were headwinds for this business currently is they are seeing challenging consumer environment, and they also are still somehow experiencing some headwinds from their divestiture of that Brazilian online marketplace Elo7 that they, I believe, got rid of last year, and they're apparently still dealing with a little bit of some headwinds with that as well. So over to our valuation spreadsheet, we're going to look at the financials and the history of how this business has performed. We got our revenue, gross profit, and net income over here. And we can see for the most part, we're starting to see growth level off quite a bit. Had some nice run up, and since after COVID, it's just kind of sort of slowly grown, if anything, slightly declined, as we can see here. Net incomes actually have slightly declined. But on our margins, though, our margins on gross margins, very good, sitting at 71%. Net margins over here, last quarter, sitting at about 9.8%. Trailing 12 months, 10.8%. So margins, they've done much better on margins. We can see that in the past, sitting at mid to high teens for an average there. So they should be able to potentially get some of that margin back here. Maybe after they get rid of this divestiture they had from Elo7, maybe that'll help get some margin back there, but we'll have to wait and see on that. Return on invested capital is sitting at about 16%. We got a PE ratio historically on the lower end of a PE of where it's previously traded. Cash to short-term debts, we got plenty of cash to cover our short-term debts. We come to cash to total debts. We do not have enough cash to cover total debts, but we do have a pretty good chunk of it covered for total debts. And we can get a better breakdown of that once we get over the 10Q to see if there is anything we can maybe strip out of total debts to make their balance sheets look a little stronger. Price to sales, sitting at a low of price to sales, 2.55, historically significantly higher for price to sales. Free cash flows, we got some pretty decent free cash flows, consistent free cash flows sitting at, mid to high 600 range. Capital expenditures, pretty nominal, sitting at $41 million. Share count dilution, pretty flat, but a little bouncy all over. We do see that looks like they do have some sort of share buyback program going on. So over to their 10Q onto their balance sheet. So we are sitting on about $1.04 billion of cash. This is down slightly from last quarter, which was about $1.15 billion. Then we come down here to our total liabilities, and we're sitting at, we know we got $1.04 billion in cash. We got $551 million in short-term debts. We do get to strip out some deferred revs here of about $14 million. So our total 565 in debts minus 14 leaves us with about 551 in short-term debts, so that roughly leaves us with $493 million left over in cash. And then we subtract off 565 from our total liabilities here of $3 billion, which leaves us about $2.5 billion minus off whatever cash we have left over, roughly add about $2 billion in total debt after we use up all of our cash. So in short term, our balance sheet looks pretty good, but in long term, obviously not enough cash to cover all of its current debts. Now to our income statement, we got revenues, which are slightly higher year over year here, we can see. And then also down to cost of revenues. So we have more revenues, costs are down, and then that obviously gives us more gross profits. So that's always very good to see that you got more revenues minus lower costs is always going to be a better margin. So very good, very nice to see there. So total operating expenses though, they have increased their total operating expenses here. Most of it appears to potentially have been just from really just marketing. They do have some G&A that also ticked up a bit, but they did product development slightly lower. So overall, majority of that is in marketing. So after you subtract out your costs and your provision for income taxes, you're left with about $63 million last quarter. This time last year, about $74 million. They also had a little bit less provisions for income taxes that they subtracted off year over year. So that is basically the difference. Then come down here, we can see our share count went from 143 down to 135. So we are, or they are, currently buying back shares. Then to our cash flows. So we got net incomes that carried down to cash flows, top line cash flows. We got $63 million. We do have a huge stock-based compensation expense that this is in a quarter as well too. $71 million of stock-based compensation, which is more than your total net incomes. So that is a lot of stock-based compensation. So that is something to always keep a close eye on, especially if this business cannot pull through financially, or if they have like a bad quarter where they don't buy back shares, you're going to get diluted pretty heavily, pretty quickly with this one. So stock-based compensation, we can see, is more than their net income, but they are also buying back more than they're issuing by about double currently. And they did the exact same thing last year as well. So what they're paying out, they're buying back and then some. So that is a good thing. But if things financially do take a turn a little bit, they might not buy back shares that quarter, or for potentially a couple quarters. That would be something to be aware of for sure and keep an eye on. So down here overall, we got net cash provided by operating activities sitting at about $69 million. So 69 million in free or cash from operations, minus $2.2 million in capital expenditures, leaves us with about free cash flow this quarter of about $66.8 million. Down here to our cash. So we burned through $125 million in cash this quarter. Subtract that from our cash at the beginning of the period. Now we're sitting at $789 million. So basically the loss of cash was, majority of it was from just repurchase of stock there. So back to our valuation spreadsheet. We are going to go through some comps here. We got PDD, eBay, and Alibaba are the three I pulled in for competitors to Etsy. I do feel like Etsy is more of its own little niche type deal, but I think PDD, eBay, and Baba are somewhat similar, I suppose. So come down here to our charts in comparison. Market cap Etsy in comparison to, well, Alibaba has a significantly larger market cap than all of these companies. And Etsy's sitting down at $2.7 billion market cap, Alibaba $129 billion market cap. Growth rates on all four businesses. eBay not looking for any growth, but the other three pretty decent growths. And over to margins. So the first three here, margins are very good. Even Alibaba's not too terrible on margins. Over to operating margins. PDD and eBay still continue to have pretty good margins and profit margins. I mean, all four are positive profit margins. They're all, they're okay. Etsy and Baba not as great, but PDD and eBay, fantastic margins. PDD, in my opinion, is a very strong, very good business. Two, free cash flows. All businesses, positive free cash flows. Return on invested capital, all positive return on invested capitals as well. So very good. And PE ratio. So it looks like Etsy is the most expensive of the four that we're comparing to. Overall, in comparison here, Etsy is definitely not the cheapest. We can see that here. But for margins for all four of these businesses, they're all pretty decent. These are all pretty interesting, the ones that to look deeper into for sure, and could be future videos. PDD we have done a video on. Same thing with Alibaba. eBay we have not, so maybe eBay would be worth looking into. See, the only thing with eBay I don't like is the growth rate here. So growth is not really forecasted whatsoever in the next 5 years. So now over to our calculator. So we're going to figure out what Etsy is worth. So we're going to use current EPS and current growth rates with the PE ratio as well. And once we go through this calculator, we'll plug in forward-looking EPS and forward-looking PE ratio, which we'll pull in from Seeking Alpha right here. So once we go through what it's worth today, we'll plug in forward-looking numbers and see what it's worth forward-looking. So we got pretty much fair value today, $34.40, and our multiples comparison, $34.11. Peg ratio telling us we are really richly valued on a peg basis. Grams valuation, $58.84 per share. Discounted cash flow, analysts have a price target of 5% free cash flow growth rate. So I match that. And at that, we are sitting at a DCF price per share of $97.29. Rule 72, we are looking for an average growth rate of about 13.3. We'll then have a future EPS roughly around 7, gives us a fair value today of $46.74. So overall, what we're looking at for a fair market value on Etsy today is $54.28, 30% margin safety, $38, with an analyst price target of $78.67. I'm currently trading $60 per share. So now we'll come back and we'll plug in our forward-looking EPS and PE, so 465, 1289. So we plug those two numbers in with the same growth rate. We're looking at pretty much fair value today, $73.04. Multiples, 72.43 are pegged. Forward-looking, well, today would be 232.32, so a little rich on the peg basis. Grams valuation, $124.94. DCF will not change. Rule 72 will be able to increase this a little bit, actually quite a bit. We'll probably be looking almost at about a 14 to a 15 on that. That gives us a fair value of $93.47. So now our fair market value forward looking could be roughly $92.23 with a 30% margin safety at $64.56. So could tell us that maybe today is a decent day to pick up Etsy shares based on a forward-looking basis. Now over to the stock chart on Etsy. So we're looking at this on a weekly chart here. And we zoom in a little bit and we've got this green line, which we're currently sitting on and trading on. And this is and should be support. It is breaking through it or trying to break through it. We've also got this purple line, not a perfect line here. I mean, these charts are never a perfect science usually, but you know, we try and at least connect as many dots as we can on a line here. And it appears as though this purple line is roughly where you could see some resistance, but we're wedging out and this wedge is getting tighter and tighter and tighter. And we're a couple months yet away from an earnings report here. We're looking at next earnings somewhere between July and August timeframe. So we got a good month yet before we see earnings come through. And we're maybe going to trend sideways here for a little bit. Like earnings is going to be somewhere right in here, right? If we just kind of chop around on this green line here until earnings come out, see what earnings have, see what guidance has. And this is probably going to be the deciding factor of whether Etsy goes this way or it's going to break down. If it breaks down, I could see this coming down to about $37, $38 per share, which is the next support range that I see on this chart, somewhere around here. So if it breaks down, that's likely where it's headed. And then it might continue this wedge here with this purple line and then wedge back in. And then maybe sometime next year, maybe it breaks out. Otherwise, what we're potentially seeing here is if it does break through and above, I mean, we've got some good room. We got room up to at least probably $100 per share. That's probably $90 to $100 per share as your next resistance point. So, and that would be within line with our fair market value that we just went over. But that is it for Etsy. If you found value in this video, drop a like, subscribe, and comment back later with another stock analysis video.